And we are live. Hi, Nyago. I think
Hi,
you're
Rondy.
muted.
How are you?
Good.
Yeah,
How is everybody? How is everyone today? Thanks for coming online and spending your Sunday night with us. Okay, I'm just gonna wait for another few seconds and let's start.
no worries. Yeah, it takes a lot of dedication for people to tune in on a Sunday evening, for
Mhm.
sure.
I'm just wondering, can everybody hear us fine? If you guys can hear us okay, maybe just type okay. Can everyone hear us okay? Mhm. Okay. All right. Thank you, guys. So, yeah. So it has been a while since our first session, right? And a lot of things, I guess, had happened between then and now. Um, but maybe just before we start, just a little introduction about Stockbit. Stockbit is actually a social networking platform for stock investors. We are in web and we also have app. You can download the app, and what we are trying to do is we are trying to build a like-minded and healthy community where everybody and all the traders and investors in Bursa Malaysia can learn, discuss stocks in a healthy manner with one another. So yeah, I think stock investing or trading at the end of the day is a process of continuous learning. Um, and what better than to discuss and to learn from each other in a healthy and communal way. So yeah, if you guys haven't checked or downloaded Stockbit, please do so. Myself and Nyago is also in Stockbit, and you can find us in Stockbit as well. Yeah, so without further ado, I guess let's move on. Um, I think if you guys are looking for a short introduction about myself and Yago, you can look at that from our first gloves on and gloves off, which was done I think sometime in mid to end January. And since then, since our last session, there had been plenty of events that had gone on in the rubber glove sector, right? So I'm just naming a few here, but some of the events that had happened is things such as Intco Medical's proposed listing to Hong Kong Stock Exchange, and they are filing. And from then, or rather from those things, we actually got a huge insight, a good insight on Intco. Intco is basically the rubber glove manufacturer from China. Okay, and also after that, which was end of January, we saw the entire like Bursa Bets retail movement. Yeah, so I'm sure a lot of you and even myself and Nyago, we are in the Top Glove Telegram groups as well as the Reddit. So that had happened as well, and of course, with that, we saw like a bunch of RSS movements, and after that, we saw some profit guidance also from Intco Medical, which came somewhere around February. We will discuss about that later. And of course, the Q4 2020 results from Harta, Supermax, Kosan, and all that. And recently, which was I think about this week, or was it this week? Yeah, this week, Top Glove announced their result, and on the week before, they announced like their proposed listing to Hong Kong Stock Exchange. And of course, we also saw like COVID cases and vaccines being rolled out. Yeah, so I think we will try and cover as much as we can today. And I would like to try and keep this, not too long. Like I think the previous session we stretched it to about 2.5 hours. So maybe this one, if we can keep it nice and pack in about 1.5 hours, then that would be sweet. So yeah, I mean, like in terms of what we are going to go through today, some of the things that we will talk about are basically Nyago is going to update all of us with regards to COVID cases and the vaccines rollout, the progression, and we will also talk and touch on the supply and demand dynamics. And we'll talk about Intco Medical. I think that is very, very important for anyone that is investing in gloves. I think to understand what is going on with Intco Medical is extremely an important point to take note of, right? And there will also be some updates in terms of the supply side with regards to the Malaysian newcomers, okay? And on the demand side, I think Nyago will touch on the US market, especially now after the new president is being installed, right? And we'll also touch a little bit about the technical side of things, such as the Malaysian glove RSS, regulated short selling, on what actually had been happening in the span of 2.5 months on that regards. Then we'll of course talk about Top Glove Hong Kong listing, and we'll talk about the re-ratings that we have been seeing so far in the glove sector from analysts, and we'll try and and then lastly, of course, we'll try and look into like what next for the Malaysian rubber glove. Is it dead? Like what Nyago is gonna present later. Is Malaysian rubber glove dead? Because from the way the price movement have been, it seems like everyone is thinking that Malaysian rubber glove is going to go bankrupt or something, right? So we'll try to make sense out of all these things. We'll try to be forward looking, and we'll try to take a rational approach, I guess, in the way we'll explain things, and what everyone. And then after that, we'll come with the Q&A. So yeah, please stick to the end. We'll try and really keep this short and sweet. So yeah, without further ado, I think I'll start off with Nyago. So Nyago will perhaps, Nyago, over to you.
Okay. Yeah. So basically, the first thing that we started with the last time was we did I guess, more extensive than necessary overview on the COVID pandemic, on the virus, and so on. So the relevant topic that we need to follow up on right now is how the vaccination campaign has been going on around the world. It's no secret. I think I need to start. Okay, maybe this way people will be able to see better. So regarding the vaccination campaign, Israel has been ahead of everybody else. So how they managed to do that? They basically got a very interesting contract with Pfizer. They got access to a lot of vaccines very early on, and they exchanged that for very detailed data, medical data on their population. I think this is not something that would have been agreeable to many other people in many other countries around the world. So this is how actually Israel managed to get access to a lot of vaccines so quickly. So besides that, Israel obviously has a number of additional strategic advantages. It's a relatively small country, relatively small population, very densely populated. Relatively rich country, I would say a rich country in general. So all of these factors combined together allow it to be far ahead of the herd, as you can see from this graph. So what is the most interesting on this graph is actually the performance of the European Union. And this is something that I believe will be a major factor moving forward with the vaccination campaign. So the European Union has been lagging behind significantly from the United States and from the United Kingdom. So the United Kingdom, maybe some of you don't know, but officially Brexit happened at the end of last year. So the UK has been doing its own procurement of vaccines. So it was not following the strategy of the European Union, whereas the European Union has been arranging contracts with vaccine suppliers as a bloc rather than as separate countries for the most part. So nowadays there are some problems there. I will not go into details of that, but in general, that's how the European Union has been going through this whole vaccination campaign from the very beginning. So the problems with the European Union, this is the breakdown of the contracts that the European Union has with different suppliers of vaccines, different producers of vaccines. And besides the Pfizer and Moderna vaccines that, their production and rollout has been ongoing basically everywhere in the world, I would say. Besides these two vaccines, the European Union very heavily relies on the vaccine of AstraZeneca and Oxford University, and it also has a very significant contract with Sanofi and GlaxoSmithKline. So with the Sanofi GlaxoSmithKline group that was working on another vaccine. So this vaccine, the Sanofi vaccine, its first version failed. So it failed around the end of last year, and they are now redesigning it, reformulating it, and they're expecting that it might be ready by sometime towards the end of this year or the beginning of the next year. So as you can imagine, this is a major blow to the European Union vaccine campaign as a whole, because they have ordered 300 million doses of that vaccine. So with all else going according to plan, that wouldn't have been such a big problem. But unfortunately, there have been some significant problems with the AstraZeneca vaccine as well. So these problems started around the end of January. At that time, AstraZeneca actually, some news came out. So AstraZeneca didn't announce this publicly or anything like this, but there were news. I believe Reuters reported on that first. So it turned out that AstraZeneca was not going to complete its first quarter deliveries according to plan, specifically the deliveries to the European Union. So later on in February, the company once again said that it's going to decrease the deliveries for the second quarter of 2021 as well, specifically to the European Union. As you can imagine, this angered the European Union. There were countries, I remember Italy, Poland, so they threatened legal action against AstraZeneca. They were trying to find some alternative ways of finding more vaccines. So there was a case that personally scared me a lot. So Italy, some of the vaccines of AstraZeneca are actually produced in Europe. So Europe is not importing them from other places. They are produced in some locations in Europe. I know that one of them is in Belgium, one is in Italy. So some of the vaccines that were coming from Italy and that were headed for Australia, that batch of vaccines, which was a relatively small batch, bear in mind, but it was blocked by Italy, and that blockage was approved by the European Commission. So it was approved by the European Union, basically. So this was a dangerous precedent, not so much because of the amount of vaccines that got blocked, but because of the significance of the event itself. So it showed that Europe is very desperate to get vaccines as quickly as possible, and that it's not able to get them. And at the same time, it gave potential pretext to other players to do something similar. So in late February, actually even before that happened, the Serum Institute of India, which is the biggest, by far the biggest producer of vaccines in the world, mentioned that they have received notifications from the Indian government that they must prioritize the domestic needs of India as opposed to and put at the second rate the needs of other countries, for example. So this is also something very dangerous. Bear in mind that, for example, India is supposed to produce, if I'm not mistaken, more than 2 billion doses of AstraZeneca alone, and about half of them will remain in India, but the rest are to be distributed around the world, and some of them are going to be part of the COVAX initiative and so on. So this is, it would be dangerous if, for example, India decides to go ahead and do something like what the European Union is doing and potentially blocking exports of vaccines. Another thing that happened was that the European Union actually asked for help the United States. So the European Union asked the United States to actually share some of their AstraZeneca doses, and the US refused to do that. What is interesting here is that the United States has a significant amount of doses just lying in storage in the US right now, because the AstraZeneca vaccine hasn't been approved by the FDA for usage in the United States yet. So they have the vaccines, but they're not using them, and they don't want to share them with anybody until potentially all Americans get vaccinated, for example. And in the meantime, while all of this was happening, actually there were some arguments between the European Union and the United Kingdom. So parts of the AstraZeneca vaccine production is happening in the United Kingdom, and the European Union officials have been accusing the UK that it has been quietly banning exports of AstraZeneca vaccines from, produced in the UK and potentially coming towards the EU, whereas the opposite has not been happening. So the EU has been allowing vaccines produced in Europe to get exported to the UK, for example, to which, of course, the UK said that this has not been happening and so on. So there is a lot of tension there. And why this is worrisome is because, as mentioned, the production of vaccines is basically focused in just a few hubs around the world. So, for example, most of the countries in the world are not vaccine producers. They don't have the capabilities to produce the vaccines. So just these few hubs and them stockpiling vaccines and not sharing them with others potentially may result in some significant implications on the entire vaccination campaign for the entire world. So to show you, I believe the previous time when we talked about COVID and vaccines and everything, I did mention that all the, what people believe might be the timeline in terms of how the vaccination campaign should be going on is way too optimistic. So, for example, people are focusing on, Israel has been a lot in the news because they are far ahead of everybody else. So everybody has been focusing on Israel, whereas they don't realize that most of the countries in the world haven't even started their vaccination campaign, let alone be anywhere near to completing it, for example. So The Economist magazine shared a couple of graphs. So in general, I guess all of us know that the rich countries, specifically the United States and most of the countries in the European Union, they were able to procure enough vaccines for their populations relatively early on. Bar any kind of vaccine war type of quarrels that I mentioned, they might be able to get most or all of their populations vaccinated by the end of this year. The problem here is that while, of course, the US and the EU represent a significant part of the GDP of the world, for example, so economically they are very powerful, but in terms of population, they are not that significant. So on the continents of, so out of the top 20 countries in the world, in terms of population, 15 of these countries are on the continents of Asia and Africa. And of course, everybody is very concerned about how the vaccination campaign will go in the most populous countries, which are China and India. So according to the current setup, the currently publicly available data on contracts, China is going to be able to complete its vaccination campaign, which for a completion point, the study that I'm showing right now is taking 60% of the population being vaccinated with all of the vaccines that they have to be vaccinated with. So China is going to complete that by the third quarter 2022, and India is going to complete that by the fourth quarter 2022. So that's almost let's say a year and a half to 2 years from now. For example, Indonesia, which is I believe fourth or fifth most populous country in the world, is going to complete its campaign by third quarter 2023, for example. So, of course, some of the people that are watching us, they will notice that Malaysia's timeline is set to have the vaccination campaign completed by second quarter 2023. Bear in mind that this research is from around the end of January or beginning of February. So, by that, since then, Malaysia's government has been very proactive. It has been arranging for additional batches of vaccines. For example, it managed to procure more vaccines from Pfizer, a lot more vaccines from Pfizer actually. So, this has moved the timeline for Malaysia in particular significantly forward. But bear in mind that Malaysia is not really a very populous country. So the population is about 33 million. Compare that to countries like Indonesia or obviously China or India that are tens of times bigger than Malaysia, for example, in terms of population. So the same thing goes for the African countries. Again, some of the African countries are some of the most populous in the world, Nigeria, Egypt. So they are also going to be done with their vaccination campaigns only by potentially the second part of 2022. For some of the countries, some of the richer countries, for example, the expectations were that they would be able to get the vaccination campaign done by the middle of 2022. But of course, I'm sure that most of our viewers have heard about the South Africa variant that apparently is able to escape immunity, and that already research is starting to pour in that, and data is starting to pour in that actually this variant is vaccines created for the current worldwide prevailing variant are not as efficacious against the South African variant of the virus as they should be. Like, for example, the AstraZeneca vaccine showed 10% efficacy rate against the South Africa variant or something like this. So, we are not going to go into the details of why and what the variations are and so on, but bear in mind that in Africa right now, there are variants of the virus that are proliferating that the current vaccines are potentially not as effective against. And some of the companies, like Moderna was the first one that mentioned that. I believe Bionex, the company that is collaborating with Pfizer, they also mentioned that they're working on that. So they're working on a booster shot. So that booster shot is supposed to help against these extra variants, new variants that are arising right now. So overall, while we are fortunately in a country like Malaysia, where I believe the government has been doing very well for the most part in terms of controlling the outbreak and procuring vaccines. And I know that many Malaysians will not agree with me on that, but believe me, if you read international news and if you read what has been happening in other countries, you'll realize that Malaysia is doing very well. And while we are lucky to be in such a country, unfortunately, most of the world will not be out of the pandemic as quickly as we would like that to happen, I guess. So this is most of what I want to mention about vaccines. So I wanted to roll back to Rondi, and we are going to start talking specifically about gloves right now, and in general start with the most macro topic, which is about supply and demand in the industry.
Okay. Yeah, thanks, Niago. That was that's a very good update on COVID and vaccines. Yeah, I think so. Yeah, let's move forward to to the macroeconomics of things, which is the demand and supply, I suppose, on rubber glove, because this is an extremely important topic to see where glove is heading in the future, right? So these two diagrams over here, I took it out of the recent Top Glove presentation, quarterly briefing presentation, and I sort of double confirmed these figures with basically like the Frost and Sullivan report in their Hong Kong filing, and it kind of tally. So what we see over here is kind of like the demand against the supply, and we will touch on the supply later on, just in a short while, especially from the angle of Intco Medical. But from what Frost and Sullivan had kind of like independently studied, and recall that Frost and Sullivan did two independent studies, both on Intco and as well as Top Glove. So they should have, by right, the most kind of like up-to-date and unbiased study with regards to the supply and demand of rubber glove going forward. And so the first thing that we want to take note of is that you will see, yes, supply is going to catch up to demand, but it is only going to reach pretty much equilibrium in about 2023, according to Frost and Sullivan. And on top of that, yep.
Sorry, could you bring this to the full screen?
Oh, okay, sorry. Yeah, and so there is going to be a continuous strong growth in demand. Production volume is going to grow in tandem with sales volume. Of course, on the street where we are at the moment, in the open market, right? We look into Intco Medical. We see all the first tier and second tier, and even like the newcomers of glove coming in. And we feel like it's just a matter of time before oversupply is going to come in. But again, I'm going to touch on that later when we talk about Intco. But yeah, a lot of things are basically market driven, right? So in any sort of industry, supply is going to be very, very much based on demand. So I think both of them are interlinked. So we shouldn't look into things as if it is doomsday right now. So yeah, so that's on the first part of this. And on the second part is, how is the demand being driven going forward? And I guess Frost and Sullivan believe that one of the most important aspect of demand going strong in the future is basically to have developing country using more and more per capita usage of rubber glove, because they are extremely underpenetrated right now. So if you see in this chart, you can see that a lot of developed nations are actually consuming a lot of rubber gloves, but in developing countries, it is still extremely low usage. And the increment in hygiene awareness and the consumption of glove per capita should be the main driving factor of demand going forward. And I would also like to bring forth this particular slide, which is coming from, again, Frost and Sullivan study in Top Glove filing. So if you see over here, a lot of people has been saying that the supply and demand dynamics are going to be changing, and is going to shift dramatically post-COVID, in a sense that there's going to be an oversupply, and this is going to bring like average selling price down. But from this particular independent study, you're going to see that, yes, of course, average selling price is going to peak this year in 2021, and it's going to taper off in 2022, 2023, and so on. But if you guys see that, according to Frost and Sullivan, the average selling price of rubber glove is going to be higher post-COVID than it is pre-COVID period. So Again, this is something to take note of, especially if you think that if you are thinking in terms of like the doomsday scenario. Yago, do you want to add something?
So
maybe I'll go into your slides.
Sure.
Yeah.
Okay, so yeah, this is based on a research that I did myself. I identified as many players in the glove field as I possibly could. So there are some slight differences between my research and other researchers. For example, regarding the Frost and Sullivan research, I'm not sure what kind of assumptions they have made. I made some assumptions on production capacity, for example. I made some assumptions based on whatever data each of the major players had disclosed at that time. So similar to what Frost and Sullivan actually shared in their research, based on my research, it seems like that by the end of 2022, which is again about 2 years from now, the supply of medical gloves in particular would not have caught up with the demand of gloves. And this is based on, so the demand analysis is based on two separate researches. One is based on Markma data, and the other one is based on Frost and Sullivan. As you can see in the yellow line below, they're pretty near to each other in terms of their expectations on demand year by year. So one important note on the average selling price. So of course, you can see on the previous slide that there is discrepancy between the production capacity of the world. Although if we get to about 100% production capacity, you get near to what the expected demand for 2020 and 2021 is supposed to be. But bear in mind that this is just based on regular market projections. So it's not based on the excess demand generated by emergency situations related to COVID-19, for example. So according to a number of different researchers, the actual demand, so you can see that here, the step-up demand for 2021 is supposed to be around 450 billion pieces. But the actual demand is about 585 billion pieces. Why this cannot be realized is because there's just not enough production in the world for this to happen. And that's why you see, for example, the average selling price spiking so high up for 2021, for example. So I think it's important for everybody who is interested in gloves or who is considering investing in them to realize that the average selling price, ASPs, they are not just some random number that goes around out there. Because, the people, I have seen in forums, people are like, oh, has the average selling price gone down or something like this? So average selling price is a product of the supply and demand being in an equilibrium. So wherever this equilibrium is found, that's how price is generated. So this is just basic economics. So the price of a product is based on the supply of the product and the demand for that product, specifically in the short term. So that's why it's important, for example, that in the beginning we start with some analysis, for example, of the vaccine situation, or that's why during our previous talk we started with analysis of, in general, the COVID pandemic, because this is the main thing that drives this extra demand that is seen in 2021. It's potentially going to be seen in 2022 and so on. So one thing I want to add to what you mentioned, so it's very important that a lot of the glove companies, they have been talking about the low usage in developing countries as compared to developed countries, for example. So another thing that is very important is there were some people that were saying, okay, the United States is the biggest demand market for gloves, and traditionally it has been. So what happens when the pandemic ends in the United States, for example, eventually? So what happens is that the United States and the European Union, for example, they are going to invest a significant amount of money to actually stockpile on gloves. Because what happened is that before the pandemic, they were grossly not unprepared to actually meet the pandemic. And that's why, for example, in the beginning, there was a huge shortage of gloves. You know, there were some stories of some medical staff that were using plastic bags instead of gloves, just whatever they could find, basically. So all of these rich countries that will get out of the pandemic quicker than the rest of the world, basically, they are going to start stockpiling huge amounts of gloves for potential usage if there is any future pandemic, for example. So that's why you can see that even though the average selling prices are going to go down, they're going to go down gradually because demand for gloves in developing countries is going to be healthy, I would say, and because the developed countries are going to continue on stockpiling for at least some time after the pandemic ends.
Okay, thanks, Niago. So maybe let's move on to this particular thing, right? Which is Intco Medical. So I actually have came up with a post in Stockbit with regards to Intco Medical. Now, as a glove investor, you have to see from various angles, right? And I think one of the most important angle to see in terms of demand and supply dynamic is definitely what Intco Medical is all about. Because in my personal opinion, this is the big elephant in the room. Now, before this, there are some sort of information here and there with regards to Intco Medical, but they are pretty much fragmented, right? And it's not only, I would say, about end of January when Intco Medical is going to go listing in Hong Kong that we actually have an extremely detailed and complete report about this particular company. So without further ado, let's just introduce the biggest elephant in the room, because for all of you, whether you're gloves on or gloves off, or whether you're looking to invest in glove, or whether you're already invested in glove, to understand all the risk angles are extremely important. And to be invested in gloves without understanding the threat that Intco Medical have in your investment, I think that is a criminal. So first and foremost, Intco Medical is basically a leading Shenzhen listed personal PPE provider. It is planning to raise at least $1 billion from Hong Kong listing. And okay, so now this is where it is pretty incredible, right? Because as of February 2021, the production capacity of non-latex disposable gloves, apparently it had reached about 45 billion pieces for Intco Medical. Based on the production capacity expansion plan, this is basically the plan of Intco. The company expects its annual production capacity for non-latex disposable gloves to reach approximately 120 billion pieces in the next 12 to 15 months. So now, what this means is that currently, as of February 2020, apparently they have 45 billion pieces of annual production in Intco Medical, and they aim to have 120 billion pieces by I would say first half of 2022. Okay, and just to take this into context on how amazing this is, if this is true, right, is that in just merely 2 months, because Frost and Sullivan actually released a report on the capacity of Intco Medical at the end of December, which was 36 billion gloves. Okay, so from December 2020 to February 2021, in merely 2 to 3 months, if the report is true that they already have 45 billion pieces in February, that means they actually have added 9 billion of capacity in merely 2 to 3 months. To put this into context, right, it's on how incredible this is, if this is true, and how scary it is as you all know, Riverstone is basically the fifth largest. I would say, I think it's the fifth or sixth largest Malaysian glove manufacturer, right? And which is listed in SGX. Riverstone in itself, in its decades of operations, they are currently running at about 9 to 10 billion pieces per annum of rubber glove production. So in just merely 2 to 3 months, Intco apparently is able to raise that amount to come up with 45 billion pieces. So yeah, this is potentially, it's unheard of. When we listen to some analysts, they always mention that this sort of speed in terms of production is unheard of. Yeah, and okay, so now going forward is also Intco actually announced end of January as well a positive profit alert for the 12 months ended in 2020. Okay, so so in Hong Kong Stock Exchange, normally they have this thing where they kind of like tells you about the profit alert that is going to come up either in their half yearly report or full year report, right? So end of January, early February, Intco announced a positive profit alert, and the company actually expected the profit attributed to shareholders to range for about 6.8 billion renminbi to 7.3 billion renminbi during the 2020 period. So in ringgit terms, Intco is actually expecting to hit about 4.2 billion ringgit of net profit, ringgit equivalent of net profit for full year 2020. And if we compare this to the Malaysian counterparts, right, Kosan actually hit 1.1 billion in the same period, Harta Lega hit 1.9 billion in the same period, and Supermax hit 2.3 billion in the same period. So Top Glove have a slightly different financial year end, which is in August. So if let's say we are looking at the Top Glove actually hit 4.1 billion from December 2019 to November 2020. But of course, if let's say you take, that one additional month of December could be humongous. So I would say that Top Glove is currently still more profitable than Intco. And apart from this, I guess all the other things which is to note with regards to Intco is that currently, all this may sound scary to you. And when I first gone through the HKEX filing on Intco, I was actually quite it was sort of an eye opener for me personally as well on the speed. But a few things that we need to take note and kind of like take a step back is that right now Intco Medical existing capacity has a very much like a very PVC or vinyl gloves focus, which is about 64% of the capacity, not nitrile gloves, right? And so that's something that we need to take note of. And then another thing that we also need to take note of is that although they are making various kind of like upstream investments, which is such as some joint venture with this chemical player called Shantung Howder to make some butadiene and acronyl latex, right? This still will not be able to feed whatever nitrile gloves that they're planning to make going forward. So this could potentially be a problem for Intco Medical. And yes, I think I have read somewhere, and I've read somewhere that in the future, a lot of people believes that the quality of nitrile gloves from Intco Medical is not going to be the same as the Malaysian counterparts, because they would definitely produce kind of like a lot less of nitrile content. So these sort of things needs to be taken into account. And yeah, although maybe like this kind of like spell, it looks like a doomsday of potential oversupply in the whole entire demand and supply dynamic. But there are a few things that we need to take into account. And I actually, I posted this in Stockbit, and Nyago actually replied on some very, very good points. So perhaps I'll just pass this on to you, Nyago. I think these are three very, very important and valid points to take note of. if you believe in the doomsday scenario. Nyago?
Sure. So yeah, before going to these points, there are a few things that are important to talk about in terms of Intco that came together with their Hong Kong listing application. So many potential investors, and I believe some of the current investors of Intco, they were looking for some answers there. As Rondi mentioned, so they are primarily, as basically all other Chinese manufacturers, they have been primarily vinyl glove manufacturers, so they were not competing directly with the Malaysian companies that produce mostly nitrile gloves, and some of them produce natural latex gloves. So in this sense, Intco obviously don't have any type of background in producing nitrile gloves in the first place. So what investors, potential Intco investors, were looking for in the Hong Kong listing was, first of all, a breakdown of how their future capacity expansion is going to go in terms of types of gloves. So Rondi, I'm not sure if you can show my presentation. I have a screenshot there.
Yeah, you need to share screen, Nyago. Your screen is not being shared.
Okay, sorry about that. Okay, are you able to see it?
Yeah. Yep.
Okay, so yeah, this is from the Hong Kong listing application of Intco. As you can see, they are giving a breakdown of what kind of production capacity expansion they are going to go with in different production bases. So the problem here that you can spot, probably if you look at it for like 5 seconds, is that for the first 6 items in this list, which is the largest amount of items in the list as a whole, they don't mention the type of gloves that their expansion entails. So you can see that for the last 3, they are mentioning that. So for example, they are mentioning in their Qingzhou, Shandong factories, they're going to be doing nitrile gloves in 2021, and then additional expansion of 50 billion gloves that will be nitrile and vinyl, although you can see that they are not giving a breakdown of how much of this 50 billion additional gloves by 2025 is going to be nitrile and how many are going to be vinyl, for example. But you can see that for the first 6 items, they are not giving at all any information about what this capacity is going to come as. So is it going to be vinyl? Is it going to be nitrile? Is it going to be some other type of medical grade gloves capacity? Nobody knows about that. So so this is a major red flag that I would have if I was potentially an investor in Intco, and I think this has been done on purpose. So I think if they were actually expanding in the nitrile glove field, in the nitrile glove arena very aggressively, and they were sure they were going to be doing that, I don't think they were going to give the information in this way. They were going to be giving it exactly how they have given it for their Qingzhou factory. So they are going to say advanced nitrile medical grade gloves, nothing more. So that's all. That's everything that the investors need to know, for example. And at the same time, if you look, let's say, at the presentations of Top Glove, so basically Top Glove are giving updated investor presentations basically every week, sometimes even more than once a week. So in their capacity expansion plans, you can see a very clear breakdown of each individual production line expansion, what it's going to cover. So is it, what kind of gloves they are going to be doing there. This is one of the things that is a problem with Intco. Another thing that they don't give any explanation on in their filing, basically, which is very detailed. It's like 700 pages or something like that. So they don't give any breakdown on how their customers are spread geographically. So, for example, they give a breakdown in terms of how much of their capacity how much of their sales are exported to other countries and how much are within PRC itself. But they don't say, like, for example, 50% of our sales are in the United States, 20% are in Germany, 10% are in Japan, or something like this. They don't give information on that. So this is another very major red flag I would have if I was an investor, because the only reason why somebody would not give this information would be because they have very significant customer concentration risk. So I do believe, and I believe this is also supported by some import figures, glove import figures I have seen for different countries. So there is a very significant increase in glove imports to the United States. And I believe a lot of this from China, originating from China. So I believe a lot of this additional extra capacity actually comes from Intco itself. So I believe Intco has a significant concentration risk in terms of exports of their products that go to the United States in particular. And as you know, there are trade tensions between the United States and China. Obviously, right now, in terms of medical grade products and personal protective equipment, the United States is freeing the Chinese importers from any extra tariffs. But I don't think this is going to continue on after the pandemic is over. So after the emergency situation is over, I think that the producers that are going to suffer the most are actually going to be the China producers, because eventually Malaysian capacities are going to catch, and Thai capacities, for example, are going to catch up with the demand in the United States. And the United States is also working on US soil production capacity. And once this happens, I believe that the China companies are going to be flushed out as much as possible from the US market, for example. So an important thing to consider is how all of these problems considered, how Intco has actually been able to increase their sales and their capacity so fast. So there are a few factors. The first and most important, I believe, out of everything, and why they're actually so confident in some of the things that they're saying, or why they have been so confident so far in their expansion. So I'm saying so far, is because a lot of their extra production actually went to China itself. So the Rondi showed a slide that was displaying the per capita glove usage in different countries, and one of them was China. I think according to that, it was something like eight gloves per capita per year in China, compared to like 300 in the developed countries or something like this. So you can imagine what kind of a low floor the demand in China is starting from. So it is possible that Intco might have been in talks with the Chinese government, and they might have been, directly selling to the PRC government itself a lot of their production, for example. And as you can see, one of the things that transpires from their Hong Kong listing is that their internal market sales jumped from 5.2% of all of their sales in 2019 to 27.1% in 2020. So this is an important factor. Another thing that is important is that for their main customer, which was previously, I believe, only their fifth or sixth largest customer, so suddenly it became their largest customer this last year, and it contributed 12.4% of the entire revenue of the company. So I would assume that this is a major player in the distribution area, for example, marketing and distribution. And they have worked with Intco because, let's say, Malaysian players have been unable to fulfill certain orders because of the sudden spike in demand, for example. And I don't think this is going to remain this way, forever, for example. So as I mentioned, this customer has had a rather negligible, or at least much smaller contribution to the revenues of the company previously, and then suddenly spiked to be their top customer. And I mean, yeah, there are other considerations, like, for example, the China government is very proactive in their help to companies that are potentially able to generate growth for the local local economies. So one of the important KPIs that the central China government gives to the local governments in the country is to show certain amount of growth every year. And based on this growth, they give them different incentives or funds or whatever. So these governments have the incentives to actually attract high growth companies like potentially Intco to actually set up their manufacturing facilities in their regions. And because of this, for example, they have been giving Intco land almost for free. So if you are wondering why Intco is able to build factories faster than the Malaysian players, is because, well, the Malaysian players have to pay, millions for the land that they purchase to build new factories. Intco is getting it practically for free. So this is an advantage in the early stage, so in the beginning, right? So when you start building the factory, your the cost at start is obviously much lower as compared to the Malaysian players. But in terms of other advantages that potentially Intco might have, I didn't find anything in their financial reports, for example. So their operating margin for the last 2 years is about 10%. Their net profit margins are about 8%. So, and they have been selling vinyl gloves again. They have not been competing with the Malaysian players. So I don't think this is anything to brag about or to consider as some significant strategic advantages that the company might have over the Malaysian players. On the contrary, I think the Malaysian players actually, I'm very. My opinion is generally very negative on the prospects of Intco in particular.
Maybe I'll just share this one again. Okay, maybe you want me to talk about this, Nyago?
Yeah, sure. If you want, you can also mention some of the other things that we have previously discussed.
Yeah. So I think just now I kind of just switch a little bit, as Nyago was mentioning, in terms of the expansion plan for Intco against expansion plan of Top Glove. You saw that for Intco it was just a short one pager, while for Top Glove you saw how detailed it was. Maybe let me see if I can just do that again. 1 second. So yeah, this is the sort of how detailed Top Glove manufacturing production plan is. And if let's say we compare that to Intco, oh, you have that also.
Yeah, I have the same one.
Okay. Yeah, and if you look into Intco, it's just a one pager. So sometimes when it comes to talk, it's pretty easy, and talk can be cheap. Intentions is one, but whether or not you can translate that into reality is I would say another case, I suppose. So
for sure.
Going back to what Nyago and I discussed in Stockbit, right? So we need to understand firstly, why is Intco able to grow its capacity so fast? So I think Nyago had touched on this, and it's mainly due to the startup advantage, which is the support of the Chinese government that it has. And the second advantage is also, the Chinese stock market is a lot bigger than our Bursa and, some of our Malaysian listed companies in SGX. And now the important part, I would say, is number two, which Nyago rightly pointed out, why is Intco not growing even faster, right? And I guess everything comes back to supply and demand dynamics. It's just the nature of economics, and it's just how industry works. So, as Nyago had rightly pointed out just now, I would think that, and which I agree to him, I would think that Intco more than anyone else is going to be dependent on average selling price not plummeting quickly, right? And if its aggressive expansion is priced with assumption of ASP is going to only fall gradually, and if this sort of like fasten somehow, that is definitely not good for Intco. Yeah. So it's just the nature of economics, I suppose, that is going to stop Intco from growing too aggressive and growing even faster. Yeah, so Nyago rightly pointed out here, the thing stopping Intco from flooding the market with gloves is basic economics of self-fulfilling trend towards diminishing returns. I think I cannot, I mean, that's just the perfect way of answering, right? And so will Intco be the world leader? So I'm just going to read from Nyago's post over here. So while Intco is able to raise capital currently, um, it has this advantage only on temporary and only as a startup. So in the longer run, as things gradually reverts towards the mean, these advantages will be lost. So existing ecosystem players in Malaysia, our top four, especially the first tiers, they will definitely have advantages such as fuel costs, labor costs, technology, financial system, and much more likely to prevail. And I think another disadvantage of being a Chinese company is that right now they are at an advantage where US feels like they have to import PPE from China, and they have to do it kind of like very reluctantly. And also, Nyago did mention here as well that even Japan is importing only a very negligible amount of glove from China, even though they are in dire needs as well. So the key problem is that the market most unfriendly towards Chinese imports are also the ones that are in control of the highest percentage of demand. So I would think that going forward, if they have the choice, and when things are going back towards the mean, these companies would rather choose like the Malaysian counterparts instead of Intco Medical. Yeah, and again, as I mentioned just now, that a lot of the things, although it looks scary from Intco Medical, how they are going to kind of disrupt the demand and supply, but at the end of the day, these are still all just intentions. And I would like to also, I guess, showcase this in another angle from the perspective of, let's just bring them closer to home, which is like the newcomers in glove in Malaysia, right? So this is a table that I used to produce to kind of like calculate how much extra capacity and how much extra supply does all the new, or so-called the glove wannabes, or the newcomers in glove in Malaysia is going to add into the bottom line. And I did this exercise, I would say, towards the end of last year. I read through multiple news on newcomers in gloves, those people that has come up in the media and making a various of announcements here and there with regards to going to venture a new venture in gloves. But right now we are in the middle of the March, and if you kind of like just go through one by one on all these companies that already had some sort of announcements late last year of the new venture, you can actually count in a single hand some like the number of these players that are actually walking the talk, right? So if you do a Google search on each of them and just put like to see whether there are any kind of like updates from all these 10 to 15 newcomers, you would perhaps only see, Aspen, 80. Okay, so 80 already have a glove factory up and running. You will see that Aspen and Hong Seng and Iconic and Masing, the property players, they are actually really, their factories are really being built up. But other than that, like to me, especially personally, I don't see a lot of activities or a lot of announcements being mentioned in the media for all the other sort of so-called newcomers. So, as of March of 2021, the so-called glove newcomers in Malaysia had mostly been silent. So only 80 System actually have a factory built and started commissioning. Aspen, Iconic, Masing, and Hong Seng have got some developments from what I can see, but many others have not had any significant development since the turn of the year. So what I guess I would like to add with regards to those people that are overly concerned of oversupply going forward from both Intco and as well as the Malaysian newcomers, is that it's all right now still talk, and it's all about intentions. Yes, I would like to do this, I would like to do that, I would like to add this capacity and that capacity, but when you are coming into really walking the talk and really doing it, it is a whole lot of different things, right? So intention is not yet a reality. So I think that's what I would like to bring forth with regards to a lot of people's concerns of oversupply. Yes, there are. It is definitely a threat, but it's not as easy as what they are actually mentioning and saying. I think the likes of your first tiers, your Top Glove, Harta, and Kosan, Riverstone, and Supermax, when they want to increase their capacity, I think that they have done it many, many times, and they have plenty of experiences in doing that. But for the rest, maybe some will do it like what I have shown you, but maybe just don't take everything as face value.
For sure, and bear in mind that because you were showing the table, and then it says that the total extra capacity that they are going to bring within this year is about 35 billion gloves, right? So just to give everybody a comparison of what this means, just Top Gloves extra capacity that they are planning on for this year is about 20 billion gloves. This is just Top Gloves extra capacity, right, for this year. So this is all of the players, all of their plans that they have. They are considering on, for example. So Michael was actually asking in the comment section, what is our opinion on the newcomers? So I have shared a few times on that. What is your opinion, Randy?
Wait, let me just pull that question out.
Sure.
Yeah, maybe you can answer first, Inyago.
Sure. So I have mentioned in a few times actually in some of my Stockbit comments that in an industry like manufacturing, especially when you're talking about disposable products, economies of scale run all the way through the chain. So they run starting from your negotiating process with suppliers through labor force related costs to selling your products, for example, or finding buyers of your products, for example. So let's say Supermax, for example, apparently is about, we'll talk about this in a little while, but they are potentially going to be embarking on some kind of endeavor together with the US government. So they already have publicly available contracts with the Canadian government. They have contracts with the NHS in the UK, which is the UK government. So why you don't see, some of these newcomers or some of the smaller players have such contracts is because you need a large enough supplier who, if you are a large government like the United States, if you say, okay, this year I need 10 billion gloves for my strategic stockpile. So can you give that to me? So only a handful of companies in the world can do that, and this is a very lucrative contract in general. So it would potentially be for many years into the future, and potentially it will be at preferential rates, for example. So you're securing your sales for the distant future. But if you're a small player that is doing a few 100 million pieces or a billion even, or 2 billion, so in terms of all of these savings from scale, and in terms of negotiating with big players on the demand side, you'll be having problems, and you'll potentially be running up extra costs. And these extra costs in the end are going to eat up of your, into your net profit eventually. So my opinion is strongly negative on the newcomers in the long run, except for the newcomers that are coming in with acquisitions of existing players. So if you already have existing capacity, if you're a company that has existing capacity, and the only thing that you are missing is extra capital, but you cannot raise it because, for example, you are not a listed company. I mean, I don't want to mention specific names here, but if you are doing that, this is good synergy between the companies that are acquiring glove producers and companies that are listed, for example, and have the necessary capital, or they can easily raise the necessary capital. So this is good synergy. But if you are starting from scratch, I think there'll be a lot of problems with a lot of the players. Not all of them, but most of them. The prospects are negative, I would say.
Yeah, I mean, for me to answer this question from Michael, again, I would be extremely selective. I think there are some newcomers which have got a very good roadmap, and they are kind of like, even some of them are ahead of the curve. Yeah, and I also would not like to name some names, but there are some which is also coming from a very, very low market cap base. So I think these are the sort of things that you will look into as to like how fast are they gonna be able to grab the high ASPs and whatnot. So and how fast can they actually churn their production and stuff like that. It's not all of them. I would say a lot of the, again, as I mentioned, a lot of the players, a lot of the newcomers are just taking this as a chance to boost the market price, I would think. But yeah, there are a few that is very serious about this, and those are the sort of players that you might look into.
For sure, yeah.
Okay,
Maybe your answer is more fair. So yeah, you have to be very selective in if you want to deploy your funds into some of these companies.
Okay. Nyago, you want to talk about the maybe before we moved on from the demand and supply dynamics, you want to talk about the US demand?
Yeah. So now, up to now, we were covering the supply side. So on the demand side, some developments that have been happening, they are related to the United States. So the US has traditionally been the, I would say, as a single country, by far the biggest player on the demand side for gloves. So as you can see, this is from the same Frost and Sullivan report that we have already quoted a number of times with Rondi. So in 2019, the US comprises about a third of the entire global demand for disposable gloves. And bear in mind that this is disposable gloves, so this includes also vinyl gloves, let's say, that are not necessarily medical grade gloves. So I believe if you actually cover only medical grade gloves, the US is even larger, maybe closer to 40% even of the market. So what has happened is that the US has started rolling out plans to set up production facilities on US soil in particular. So there's this company called US Medical Glove Company Limited. So this company apparently has some very interesting contract with the US government. So they're building 5 hubs in the United States in different areas across the United States. And each of these hubs is actually going to be producing about, I believe they mentioned 200 million gloves per month or something like this. So, so basically, once all of their capacity is built, everything is done. Bear in mind, they start from scratch with everything, including raw material production and so on. So they are going to have a production capacity of 12 billion pieces of glass per year, which is, I would say it's significant. So there is another smaller company. It's called Showa Group. It's actually a Japanese company with production facilities in the US. So it will have a production capacity of 1.2 billion pieces once its entire expansion is ready. Interestingly, the chief of the supply chain task force of the United States has mentioned recently that the US will have a total production capacity for medical gloves of 25 billion pieces by the end of 2022. So actually, it was not by the end of next year, it was by the middle of next year, according to him. So the only piece of data that is missing out of all of this is any concrete data on the Supermax expansion in the United States. During our previous talk, we mentioned with Rondi about this. So Supermax has a plan to actually build up production facilities in the United States. The total cost of the project is 550 million US dollars, which is about 2.2 billion ringgit, for example, which may answer the questions that some of you might have on, Supermax is sitting on like 3.7 billion ringgit cash, and they are not deploying it, so they didn't distribute it as dividends, for example. So what are they planning to do with all of this cash? So I believe a large part of this cash is going to go to this US endeavor. Another part potentially is going to go to a UK endeavor they have also announced. So for both of these expansions, they have not given a concrete answer of how much production capacity they are going to be building in these markets. So if we if we take at face value all of the information that we have right now publicly, it would turn out that the Supermax capacity in the United States potentially is going to come at about 12 billion pieces of cloth, which is, I would say, very significant. So there have been some concerns about this expansion in the US, production in the US itself. Especially, I would assume from players that depend more significantly on the US market, for example. And bear in mind that this 25 billion pieces is still very far from what the actual needs of the United States in terms of medical gloves are. So the US government officials have mentioned that this capacity will cover about 50% of the immediate medical needs of the United States. So it will not cover, it will cover 50% of the medical needs, do not cover anything in terms of extra needs, for example, in the restaurant industry, hospitality, travel, and manufacturing, or whatever, any other industry that uses gloves. And as you can see, for example, there the sales quantity in the US for 2020, according to the US International Trade Commission official figures, is about 110 billion pieces for 2020. So this amount is less than a quarter of this amount. So obviously the US will, for the foreseeable future, still need to import a lot of gloves. And this is just this capacity is just going to cover their potential emergency needs, for example. So this expansion in capacity is going to potentially have different effect on different companies. I already mentioned that Intco doesn't give a breakdown of where their major markets are, but it's a widespread suspicion among many people that are observing the market that a very significant part of Intco sales actually go to the United States itself. As you can see, for example, a similar thing is valid for both Hartalega and Supermax. So for both these companies, the sales in the US represent approximately 50% of their, this figure for Hartalega is for trade receivables, for Supermax is for sales value. So it's about 50% of their business, the US market. For Top Glove, on the other hand, this is a significantly smaller piece of their business, and it has actually been decreasing. So for last year, it was about 26%. So they don't give a breakdown by individual countries, but for them, the North America market represented 26% of their business for last year, if I'm not mistaken. And for this year, it represents 22% of their business. So, I would say their business is a lot more diversified. So I like the strategy of Supermax in this case. For example, I like that they are going directly and, they're directly approaching their largest demand market. In terms of Top Glove, these changes are not going to matter that much. I would be very interested to see how Hartalega is also going to react to these changes. We know that they recently announced a 7 billion ringgit expansion in the northern region of Malaysia, which is also very interesting. And I believe many people have been waiting for, some guidance from Harta on future plans, for example. So I would be interested to see how they play this type of scenario, because for them obviously the US market is very, very important. Then it's the same thing for Kosan. So I couldn't find exact figures for Kosan except for a mention in the Edge, for example, where they also talk about a figure close to 50% of their revenue coming from the US market as well. So this is an important market for the Malaysian companies in general.
Thank you, Nyaru. So I think let's move on from the demand and supply talk, and perhaps just let's go to another topic, right? Which JK here mentioned. Will Top Glove short sellers close their positions before ex-dividend date? What is your opinion on when they will close their positions? So I think for this one, let me take it, Nyago. So on this, I would like to bring forth everyone to what I have done. This is what I would call as my rubber glove RSS tracking sheet. So it was quite a, I mean, one of those projects that I was doing from the beginning of the year, right? Every single day I look into the Bursa announcement on how much are being shorted and whatnot, and I try to make sense of it. But I actually stopped doing this, I would say, sometime in the middle of February, because then I kind of like thought it feels kind of pointless, and I'm gonna explain to everybody why. So yeah, you all can see some of the works that I've done over here. And okay, so over here on the right hand side, everything that is being highlighted are what I assume as the short participants short covering their position. Okay, so yeah, JK, I'm just gonna I'm gonna answer your question in a more holistical manner, I suppose. So yeah. So this particular RSS tracking sheet that I have been doing, in the beginning it was done to keep a tab on the short participants movement in the market. And I thought that so much volume was shorted in the open market at the beginning of the year at relatively low prices, right? And that the opposite flow was supposedly to be due back to the open market. So that was my assumption. And actually, just a day before our first gloves on, gloves off talk on the 19th of January, Kosan and Top Glove shortists had actually started to cover their position. Okay, and they have started to cover their position a little bit. And of course, then what happened is that early February, the entire Bursa bets movement happened. And I think during that time, when the price was about, when the price was about 6 or 7 ringgit, closer to 7 ringgit for Top Glove, you can see that the short participants mark-to-market loss was above 300 million at one point of time. But what has happened then is that here is me doing all this RSS tracking sheet on a daily basis, looking for some sort of a technical rebound that was due back to the market from all these short sellers. But in the middle of February, these two things happened. The short participant had actually covered some sort of about 50 to 60 million of shares of Top Glove. Okay, but the funny thing is that there was no, I mean, the volume that was seen from the open market was a mismatch, and so I thought, hey, how can that happen? Like, was there like about 27.6 million shares that was traded in Top Glove then? Was there 33.9 million shares of Top Glove that was done then? But during these 2 days, the volume was well short of that particular volume. So then I started digging. I tried to kind of like call some of my contacts in the SBL departments, or people that know someone in the SBL departments, and they kind of like confirmed that there is actually this method where you can short, and you can cover your shorts from buying back in the off market. Means you can actually do DBT, or you can do like a off market transaction to do your short covering. And I was like, wow. I mean, this. Well, okay, so the question is basically, when you short, or rather when the short participants is shorting the market, they kind of like put some sort of price pressure in the open market. But when they cover back their short, the flow that was due back in the open market did not happen because they did it off market. So whether or not this is a fair market practice is up to everybody's interpretation, personal interpretation. But in my personal opinion, I think that this could be one of the key reasons for the spiraling down of the negative sentiment thereafter. Of course, the main reason is still the entire COVID cases improving and vaccine is being rolled out. But I think in terms from at least the reason of the entire Bursa Bets movement, the reason of me doing my RSS tracking sheet is that I thought in the beginning that there could be some sort of a technical rebound, especially for Top Glove, from the shortest that was due back in the open market, but that did not happen at all. So that was being done offline, and so yeah, I mean, so that's that. So answering your question, Jonathan, is will Top Glove short sellers close their position before ex dividend date? To be honest, for me, yeah, if I'm it doesn't matter. Like, they are really in the money right now. If you see over here right now, I would say a lot of the short participants, as of like on Friday, they are looking into a mark-to-market gain of close to 300 million. So if they would like to cover their shorts, they can definitely do so via off-market. As a matter of fact, if you see last week, right, there has been some sort of short covering in Harta Lega and Kosan as well, for about 7 million and about 8 million in Kosan. So I think they are starting to already taking some profit. But I don't think we are seeing that in the open market. So hopefully that answers your question.
Just wanted to mention something for the sake of full disclosure, I guess. There was a question that was sent to Bursa, and somebody shared it in the Telegram group. They shared their answer regarding this mismatch, basically. So the answer of Bursa was that the short seller was accumulating shares bought back over a number of days, and only return them all at once to their rightful owners. There are a number of problems with this. So the price in between these periods was almost not moving at all, especially between the first large closing that happened and the second one, which happened, I believe, just 2 business days later or something like this. And the other problem is that it doesn't make any logical sense that the short seller is going to be doing that, because for every day that they keep the rights over the shares, they are paying a borrowing fee. So why would you want to accumulate shares before returning them? It doesn't make any sense. But that was the official answer of Bursa. So for for everybody to know.
And yeah, another thing that is actually quite funny, right, is that if you guys see over here in the middle of February, the short sellers actually already short covered about 60 million shares, and this 60 million shares is about 25% of their holdings. So as a matter of fact, the short sellers actually, well, I don't know whether they do it on purpose or whether this is they just cutting their loss. But when they cover these shorts, they are actually taking in a hit of at least 10%, in my opinion, because the market price then was about 10% higher than their kind of like average shorting price.
Yeah, it was about 620.
Yeah, so it's about 10% higher than their shorting price. And imagine that you are doing this off market, right? So if let's say the person that is selling you if the person on the opposite side of the short seller is doing this logically or rationally, they're definitely not going to just do it at that particular market price, but it's going to be a lot higher. So yeah, I think actually the short sellers already kind of like short covered at some losses in the middle of February of 25% of the
So of course the implications of all of that are that when they started covering, a few days after they started doing that, the price went down quite significantly, right? That's what you're trying to say. So they were covering at a loss, and they were not aware that the price might actually start falling, because currently they are sitting at significant paper gains, as Rondi mentioned. But even the short seller was unable to predict that suddenly the price of the shares was going to plummet, by like RM1 or something like this within the span of a week or a week and a half or something like this.
Mm-hmm. So what's next? Yeah, go.
Okay, so yeah, I think there were a number of questions about the listing,
right? Yeah.
right? So let's cover this. I know we are already over time once again, but I know that a lot of people are very interested in that. So regarding Top Glove announced their Hong Kong listing on the last trading day of February, which was about a couple of weeks ago. It puzzled a lot of people, even though Top Glove first announced that they were looking into that, if I'm not mistaken, in late September, and they officially announced it in October. So they announced that they have started the process of getting listed on the Hong Kong Stock Exchange. To give just the general information to the viewers, the Hong Kong Stock Exchange right now is the fourth largest stock exchange in the world in terms of total market capitalization. The only three bigger than it are the New York Stock Exchange, NASDAQ, and if I'm not mistaken, the Shanghai Stock Exchange. So it overtook Tokyo, for example. So it's an enormous stock market. It's about more than 6 times bigger than Bursa plus SGX taken together. So this is, a completely different ball game there. We are not talking about, small players or anything like this. We are talking about the world scene. So what baffled a lot of people is that previously Top Glove announced that they have plans for a capital expenditure of a total of 10 billion ringgit over the next 5 years for expansion, for ESG initiatives, for improvements in their their technology systems, their production facilities, and so on. So the thing is, if you do the calculation, you will realize that if they did not announce this bonus 20% dividend for this year, they were actually going to have had enough. They would have generated enough cash to have been able to fund their entire expansion, right? So it was not it would have not been necessary for them to have raised any sort of capital on the Hong Kong Stock Exchange. So they are looking at raising about 7.77 billion ringgit. Approximately, because we don't know the opening price of the IPO there, for example. So let's say 7.8 billion, and let's calculate from there. So I have done some estimates on their net profits for the next remaining period, and I have minus the dividend payouts. And when you do all of that, you get to a figure of about 6.4 billion ringgit of unallocated cash over the next 5 years that the company hasn't announced yet what they would do with this cash. So, for example, one of the things that they have mentioned is that they are considering continuing on with the 70% dividend payout for the next financial year as well. So this might be something they might be looking into doing. They might do some additional share buybacks, for example. But this is a massive amount of cash that we don't know where it's going to be deployed yet, even after we account for the 10 billion capital expenditure in total. So why certain analysts, and I think Rondi has something prepared on that later, why certain analysts are, they have a negative outlook on this listing. For the people who are not so into finance or accounting, for example, there are different types of capital in the capital structure of a company. You can say that the most expensive of these types of capital is the equity capital. So the cost of equity in general is significantly higher than, for example, the cost of debt. So if you look at what Harta Lega, for example, are doing, I just mentioned about their 7 billion ringgit expansion that was just announced. So what they are doing is that they are going to be funding this expansion with taking on extra loans or debt. Maybe they are going to issue some bonds. I think they have not given proper guidance on that yet. And whatever cash they are able to generate, of course. The same thing goes for Supermax, for example. So the guidance that they have released on their expansion is also that they are going to be using internally generated funds to fund their expansion, for example. So this would be what if you look at the textbooks, if you look at any financial analysis, they will tell you that if you have the capacity to use only cash for your expansion, that would be great. If you cannot use just cash, take debt, especially in an environment like right now, where obviously debt is extremely cheap since we are at historically lowest interest rates. But take on extra equity, raise extra capital through issuing of extra equity only if you, for whatever reason, you cannot do it in some other ways, for example. But again, this is not a this is not a basic game here. We are not talking about, for example, Top Glove issuing new shares on Bursa or on SGX, let's say, or some market that is similar to this. We are talking about them going to one of the largest stock exchange markets in the world. And this is going to give them exposure to a lot broader range of potentially retail investors and most importantly, institutional investors, both from mainland China and from the United States. And I believe that's the main idea of the listing in the first place. In the second place, if you actually calculate, so the company says that it's looking at becoming a Fortune 500 company by 2030. So previously they have mentioned 2040. So now they have rolled it backwards or forward to 2030. So a Fortune 500 company, if I'm not mistaken, needs to have at present at least 25 billion US dollars in revenue per year, which is about 100 and a little bit billion ringgit. So if that happens, actually this would mean that Top Glove would have to have twice the revenue of Maybank, for example, which is for many years the leader on Bursa in terms of market capitalization. So if we compare revenue generation with potential market capitalization of the company, it would mean that Top Glove would have to be, in terms of market cap, it would have to be twice larger than Maybank in order to achieve, if they manage to achieve that, for example. So obviously the company is aiming at a scale that is inconsistent with the scale of Bursa Malaysia and the funds available in Malaysia in general. So they have no other way but to look at other markets in particular. So having all of this in mind, bear in mind that this also changes the timeline of their capital availability. So if we go back to what we were talking with Rondi a while ago about the average selling prices, so if you remember, the average selling prices are going to be the highest obviously this year, and then they are gradually going to go down over the next few years, right? Until they settle at a level that is approximately similar to the level before the pandemic. Although, for example, some of the reports, I saw that there were some comments about that or some questions about that. So they were asking how are the prices going to settle above the pre-pandemic level. So, this is a level, this is a question you might want to ask the actual researchers that have prepared the reports, Frost and Sullivan. But in general, I believe the level is going to be relatively similar to the pre-pandemic level. So obviously, every company that is looking at expansion, it's going to want to have this expansion happen as soon as possible. So it's better if your expansion happens this year than next year, and it's better to happen next year than in 2023, for example. So because although Top Glove is going to generate over the next 5 years enough funds, even via their normal, normal business, to fund their capital expenditures that they have allocated, it would happen over a longer period of time. So, for example, in 2023 and 2024 only, they'll have additional about 2.5 billion ringgit. So only then they'll be able to start with the allocation of these funds, only once they have them. But this listing on the Hong Kong Stock Exchange gives them the capability to actually do that right now, to start with their further expansion or whatever else. They have mentioned that they want to use 60% for expansion, 10% for R&D, technological improvements, and so on. So they can start doing all of that right now instead of over a longer period of 5 years, for example, which, from my point of view, is the preferred way of doing that. I believe that's why Intco is also one of the reasons why Intco is looking into this expansion very aggressively right now, rather than, for example, next year or the year after. So overall, I think people need to review this listing from a broader picture point of view. So not just focusing on, for example, okay, the cost of equity for the company is going to increase, so the weighted average cost of capital is going to increase for the company. So, this is going to result in their future earnings being discounted to the present at a higher discount rate. And, if you are looking at the textbooks, that's exactly what you're going to learn. But a pandemic like this and a situation where a company can benefit from this, from the demand resulting from the pandemic, is actually asking for something very different. And I wouldn't say that the Top Glove situation is at all anything to what you would find in the textbooks, for example. So I think, all things considered, the listing is good news. What is the more important question here that every investor in Top Glove would need to ask themselves is what this it's my projection, 6.4 billion ringgit of unallocated funds they're going to be doing with. And I think there are going to be some rewards for the investors that come from this amount. But of course, we haven't gotten any guidance on that, but that's, I assume, the most logical thing that is going to happen, and that's my expectation in general.
Okay, I don't have any comment on the Hong Kong listing for Top Glove.
I mean, it's a complicated matter. I saw some analysts, for example, there was an article on the Star even yesterday. One of the analysts was mentioning that it's bad news and they should call off the listing. And I think these people are just reading too many textbooks and they are not looking at the actual situation of the company and what this listing actually means for the company. So, what are the plans of the company? So if you very rarely hear, if ever, I don't remember hearing any other Malaysian company talk about that, but how frequently do you hear about a Malaysian company mentioning that, okay, I want to be a Fortune 500 company in a certain period of time, like 10 years or 20 years or 30 years? They're not talking about that. So you're not talking anymore about Top Glove as a Malaysian company. You're talking about an international conglomerate with potentially, they have talked about potential expansions in other countries in North Asia. Obviously, they mean China. I think, the plan of Top Glove goes much further beyond, them just being a Malaysian company that is a large cloud producer, for example.
Yeah, I mean, I generally agree that for the long term, this Hong Kong listing is very, very beneficial for Top Glove. I think that's that one I agree. So okay, let's move on. I think there are a lot of questions with regards to why Malaysian analysts downgrades gloves target prices and all that. So yeah, let me answer this. So over here, I think yeah, I posted this also in Stockbit, and it is true that it's a little, it could be it looks very peculiar in a sense that you are seeing a lot of the analysts are actually upgrading their profit projections on Top Glove upwards. However, their target prices are being reduced, right? So they're it feels very illogical and I suppose irrational. And of course, some of the reasoning that they give. Again, I'm actually using the Stars article yesterday from the analyst. I think that the article have got a few good points, right? And so yeah, I think one of the, and Nyago also kind of like mentioned this in a Stockbit post. One of the common justification is basically how they are doing some ESG, or how the Hong Kong listing are very dilutive in nature, so and sentiment driven and whatnot. And I would like to just kind of like highlight, because I do see a lot of people online talking about this, and they're sort of like, why is the analyst downgrading this and downgrading that, and how this is unfair and all that. But I personally think that as much as you feel like it's unfair, but I do feel unfair for the analysts as well because a lot of people were praising and talking about the analysts and praising them when a lot of their target prices are in accordance to their narrative. I would basically just say that in terms of being an analyst, it's not an easy job. It's a tough job, but I do agree on this particular part of the Star article over the weekend. That this particular, okay, so basically this person, Pankaj Kumar, he mentioned that it is important for an analyst to be driven by fundamental valuation and not get distracted by the vagaries of the market. While valuation is an art, there are ways analysts could be more grounded in terms of valuing a company and not get carried away either in a super bull cycle or in a bear market. I think that kind of like really sums it up, and I agree in that. In a sense that I do wish that some analysts, especially, they are less sentimental, they are less sentiment based and more grounded in terms of valuing a company, because there are indeed a lot of eyeballs and a lot of retailers are looking up to them as a guidance. So yeah, Nyago, do you have anything to add on that?
So yeah, it's very interesting that you mentioned sentiment, because I must say I was quite shocked that some of the recent reports were explicitly mentioning sentiment. So I am surprised that the financial analysts, that most of them are, I guess, supposed to have a CFA and so on. I mean, I think if you go and ask any CFA teacher if you have to take into account sentiment in your valuations, they are going to ask you to never sit for a CFA examination ever, for example. But some of the analysts are apparently taking sentiment into account, which I'm very surprised about. Other of the analysts, so you are, for example, showing in your graph that most of the analysts, although they have cut their price targets, they have actually increased their net profit projections specifically for this year. So what is interesting is that this is not the first time that this has happened. So analysts have been boosting up, bumping upwards their projections for this year's earnings all the time. Like I think this is the third or fourth quarter in a row that they are doing this. And you know, not many of them are doing it for future years. For example, as you can see from your table, some of them have also adjusted upwards again for 2022. Most of them have not adjusted for 2023. So with other things considered and with what has been happening so far, my expectation is that the next quarter passes and they are going to start, you know, bumping their projections for 2022. Then for you know, once quarters start rolling over, they're going to start bumping for 2023 and so on, which is not great. So you can see that some of these, I don't want to mention names explicitly here, but from the column that is about net profit projections for 2021, you can see that some of the projections are completely unrealistic. So the company has already generated 5.2 billion ringgit in net profit for the first half of the year. So for the next half of the year, keeping in mind that the company has guided that it expects that the earnings are going to be higher in the second half of the year as compared to the first half. So how is it possible that you can give any kind of projection that is below 10.4 billion, for example, for the entire year? I mean, this goes counter to what the company is guiding. So this means that, I mean, I don't know what this means. This means that you don't trust the company, I guess.
Right. Yep. Would be very interesting to see your profit projections. I can share mine one of these days as well in Stockbit.
Sure.
So Sean is asking, how much are prediction market sentiment? What's the true valuation based on valuable soup? I'm not sure how to answer Sean actually.
Okay, we cannot know about that, so we can't know how much the sentiment plays a role in their valuations. So one of the things that in general I think everybody needs to consider is that while they cut their price targets, for the most part they kept their calls. So for example, if they had a buy call, they kept their buy calls. If they had a hold call, they kept their hold call. I believe Maybank is the only one that changed their call basically out of all of the analysts. So bear in mind that as a type of market makers, so this is just my theory again. So we can't know what is going on behind doors, right? So bear in mind that as market makers, investment banks or investment institutions in general need to be able to make the market move. So for example, the opinion of the analysts in general is that Top Glove is a buy, and they need to set a price target that is not too flashy and it's not too unrealistic. So for example, let's say they think that the correct fair value of the company is 10 ringgit, but how can they give a 10 ringgit price target when the current price is 5 ringgit, for example? It doesn't make sense, right? There'll be a lot more questions in this scenario than if, for example, they give a price target of 6 ringgit 50 cents at the current market price being 5 ringgit, for example, right? And then even like you have to consider that at the current market price, even some projections that are like 6.57, 8 ringgit or something like this is still an upside of like 50 to 70%, for example, or something, which is a huge upside. Like you will very, very rarely find in the market anything that is with an upside of 50%, for example. So, and this is across the board, right? This is not a single analyst that gives such targets.
Okay, there is a number of questions with regards to structured warrants and exercise ratio and all that. Nyago, you want to answer this first, and maybe I'll answer my personal view as well.
Okay, so we have discussed on that in private and on Stockbit as well. In the most recent times, I do believe that structured warrants did have something to do with the fall in share price in Top Glove and Supermax in particular that happened at the end of February. So there were a lot of in-the-money structured warrants at that time. And as a perfectly legal, perfectly acceptable activity, the investment banks that issue the structured warrants, they have the right to hedge their positions in case the price spikes upwards. So they hedge their positions by buying shares of the mother company on which the structured warrants are based. So again, this is a perfectly standard market practice. And when the time comes for the exercise price of the structured warrants to be calculated, so the investment banks have the right to actually use their hedge position and to unload and sell some of the shares that they are holding in order to suppress the mother share price. So this was most clearly evident in the case of Supermax. I would say more clear than in the case of Top Glove, because in the case of Supermax, there were a lot more structured warrants that were in the money, significantly in the money, and they were issued from a few different investment banks. So this means that a few investment banks were on the sell, on the short side of this equation at that time. And in the case of Supermax, this resulted in a perfect storm where the investment banks were suppressing the price. This resulted in potentially some margin calls from people that would have bought shares on the margin. And then you can see that nowadays I have posted about the Supermax price right now. That is, it's one of the most ridiculous things that you will ever see on Bursa for a KLCI company, I guess. You cannot have a company that has about I think something like 25 or 30% of its current market value stored in the cash that the company has right now. So, and we are talking about a stock that has been considered growth stock forever. Like we are talking about glove companies that have been considered growth stocks. It's not a company that is going to bankrupt next year or is in its zenith and it's dying down or something like this. So, yeah.
Mm-hmm. Yeah, so I do agree with Nyago's answer, especially on Supermax. It indeed created the perfect storm. But all in all, personally, I think a lot of retailers are. I mean, this is my personal opinion. I think a lot of retailers are overestimating the power of the investment bankers. I mean, these people that issue the structured warrants, right? I just, in the case, for instance, like your Top Glove and Harta, and some of the times, I feel like they are very big, and these investment bankers they do not have such power, unless, for instance, exactly like what Nyago had mentioned in the case of Supermax, where there are a lot of in the money sort of exercise price, and there are a lot of different issuers of the warrants expiring within a similar time frame. So I think that then will definitely it can somehow move the market. But I mean, again, most investment bankers are also delta neutral most of the time. So it could definitely be a reason for. I mean, so yeah. In all, I think structured warrants and exercise ratio can influence the share price, but I personally think that it is a minor one, unless exactly what Nyago mentioned in the case of Supermax. So
it's certainly not something. So yeah, to sum everything up, it's certainly not something that alone on its own can result in what has been happening. So the structured warrants are not the main reason why the price has been falling. So they can have a significant effect in certain cases, but in most cases, in standard scenarios, you will not see what you're seeing, right now.
Yeah. So guys, I think it's been quite. It's over 2 hours. It's almost 2 hours already. Maybe let's. I would just like to wrap things up shortly as well. Maybe on this particular point, what is the fair price on your point of view for top glove? I think on this, I would like to bring back the exercise that I used to do on the gloves on and gloves on part 1. So yeah, and this is not my target price, okay, but I mean, it's just an exercise that I'm doing to give everybody a rough guidance on what could be the bear case fair value for the top 4 glove players, in my personal opinion. Okay, so when I look into this, like what is the exercise that I'm doing right now? So what you can see over here is that these are the historical PE valuation of the top 4 glove producers in Malaysia, right? You have your Supermax over here, you have your Kosan, you have your Harta Lega, and you have your Top Glove. Now, I am basically going to bring them the historical valuation all the way back from the beginning of their existence. So if you guys can see, maybe let me just full screen. If you guys can see, you know, the 3 years historical mean PE average is actually the highest. It's higher than the 5-year historical mean, which is higher than the 10-year historical mean, which is higher than the all-time historical mean. So what I'm going to take as point number 1 is I'm going to take the lowest historical mean of the top 4 glove players, which is basically the historical mean of its all-time historical mean. Okay, so for Supermax, the all-time historical mean is at about 12.2 times PE. For Kosan is at 16.8 times PE. For Harta is at 27.3 times PE. And for Top Glove is at 22.3 times PE. So these are all the lowest historical mean in their history. So now, okay, so this is basically for Top Glove. So we can see all the analyst forecasts here. Okay, but what I have done for Top Glove is that I have sort of compiled all the analyst projections on net profit, and I'm only going to use the 2023 estimated net profit. So I'm going to use the lowest net profit amongst in the next 3 years. Okay, so the consensus net profit from all the analysts, but of course you need to take this with a pinch of salt, because as Miago had mentioned just now, you know, all the analysts have a tendency to kind of like report below the actual figure, especially for the past year or so. So it is definitely it could definitely be higher than this particular average. Okay, so what I have done is that I'll take the analyst forecast for 2023, the average net profit figure for 2023. I'll try and be forward looking, and I'm going to imply the all-time historical PE average, which is at the lowest, which is 22.3 times for Top Glove. And what I have come up with is that I come up with an intrinsic fair value of 7.31. Okay, so coming back to this, so for Top Glove, even in the bear case scenario where I'm looking into a normalized full year 2023 target price, okay, by the way, not a lot of people don't really look into like 3 years in advance because there are just too many uncertainties, right? But right now, if I'm looking at the 2023 target price, okay, which is now being derived by the average of all analysts' projected net profit in 2023, at the company's lowest ever historical average, I still come up with a 7.3 intrinsic value, which is about 41% upside from the current market price. So if you see that this 7.3 is, I would think it's quite in line with a lot of the analysts' forecasts, but remember mine is normalized full year 2023. Okay, so that's basically for Top Glove. Now I am doing all this exercise again for the rest of the for the other 3 counters. So for Harta Lega, what you can see here is that on the normalized full year 2023 target price derived from the average of all analysts' projected net profit in 2023, which is 2.02 billion, okay, and at the company's lowest ever historical average, which is 27.3 times PE, what I derive is basically a fair value of 16.1, which is about 66% upside. I do the same thing for Kosan, and I come up with 5.12, which is 44% upside. And if I do the same thing for Supermax, I come up with 7.15, which is 75% upside. So yes, again, as what Nyago have mentioned just now, to me, Supermax right now is, again, as what Nyago mentioned, as a KLCI component stock trading at the current price, it's I don't know, it's just unnatural.
Well, I mean, I was trying to figure out, so, and this is the last point that I want to make here before we end. I was trying to figure out what might be the reason for that. It's very interesting you are showing right now this slide, because it shows that the analyst calls, they give 11 buy calls. I have very rarely seen something like that, right? So all of the analysts covering the stock give a buy call on Supermax. So this is not what me and Rondi are saying, right? This is what all of the analysts that cover the stock are saying. So I was trying to figure out what is the problem besides everything that we talked about with Supermax. And one of the problems and one of the things that I believe the management need to do is they need to give a proper guidance on what exactly they are going to be doing with their cash. So this is something similar with Top Glove. As I mentioned, when you go in and calculate everything carefully, you are left with many billion of cash or capital that is unallocated. Right? So sorry, Rondi?
No, I'm just saying retain earnings. Yeah. What are they going to do with their earnings?
You have retained earnings, you have earnings coming in, and you don't get proper guidance on what's going on with them. Top Glove have given guidance on their expansion. They have given guidance on what they are going to be using their Hong Kong raise capital for, but Supermax have not provided anything in this regard, and everybody's like wondering. I think they gave something like 3.8 cent per share dividend or something like this for the last quarter, which is like, I think this is less than 1%, if I'm not mistaken. So, and when you're sitting on a cash pile of 3.7 billion ringgit, obviously your investors or potential investors will want to know exactly what you want to do with this money, right? So it's just my speculation that a big part of this money is going to be used for the US expansion. But if your US expansion, for example, costs 2.2 billion, you still have about 1.5 billion of existing retained earnings that you still have not allocated. So this is what investors, I guess, want to learn about from the Supermax management. And I think as long as they give some proper guidance on that, I think the Supermax position on the market can actually improve.
Yep. I think we perhaps have covered most of the questions. I do see a lot of the questions are the things that we have mentioned in the presentation. Yeah, I mean, guys, sorry, but it's been over 2 hours. At this rate, we're going to beat our first session's timeline, So I think, going forward, if let's say you guys have any other questions, please feel free to drop by Stockbit and tag myself or Nyago. Especially Nyago, Nyago, you've been like amazing. I mean, you're super imba, like with all the presentations you've done today. Even I myself are learning a lot from you. Yeah, so please do drop by Stockbit and give us a tag. Yeah. Nyago, do you have any last words?
Yeah, I mean, I hope that people will get active on Stockbit because we, especially Rondi, so he's very, very active there. He's engaging with everybody and answering all questions. I am also trying my best to do the same thing. So if we haven't covered anything today, please drop your questions on Stockbit and we can have a proper discussion there.
Okay. Any last words with regards to Rubber Glove and investments in Rubber Glove?
So it was very important that you brought up this question from William just now. Yes, Bursa. I was recently invited at another talk, and I had a similar question. So on Bursa, short-termism is prevalent for a number of reasons. I don't want to discuss the macroeconomics of Bursa Malaysia in general, but this is all the more reasons why especially retail investors need to be extra careful when investing on Bursa. You have to always do your due diligence, and you should not think with a short-term investment horizon in mind. So if you take a position, know that you are not going to be exiting next week or next month or anything like this. So don't play around. Malaysia, Bursa Malaysia is not a good place where it's not from my point of view, it's not a suitable place where you should play with your money.
Okay.
What I mean is that that's not to discourage people to invest in Bursa Malaysia. So on the contrary, I think you should invest. Just remember what investment means. So we are not talking about a contra play that you buy in the morning and sell in the evening or something like this. We are talking about proper real investments.
Okay. Again, thanks everyone for tuning in today. I think as a closing remarks, I think my closing remarks will be the same as the first gloves on, gloves off closing remarks with regards to rubber glove. I personally think all in all, it's good to have exposure in the rubber glove in your portfolio, especially this year, right? Because if let's say you are a true fundamentalist, an exposure in rubber gloves gives you a lot of things. Like it gives you value, it gives you yield, it gives you a hedge against lofty tech or tech manufacturing sectors in Malaysia, or even like any backdrop in earnings expectations or delay in maybe like your COVID-19 recovery play. Also, it provides you with earnings visibility against, for instance, volatile commodity related theme that maybe you guys might be exposed to and whatnot. So I think it definitely just adds balance into the entire thing. And if you don't have like exposure in rubber gloves at this current juncture, the valuation in itself just look extremely undemanding. And I think with that, I think we are done for today. Thanks again for coming, Nyago. Thanks again for coming in. Always a pleasure to have you, and I learned so much from you, man. Seriously.
Thank you, Rondi, and thanks everyone for being so patient.
Yep. Thank you, everyone. Thanks. Good night.
Bye-bye.